This is Jim Emter of Ahn and Company, Alexandria, Minnesota, with your closing grain and livestock comments for April 24th, 2020. Corn market down 2 to 3 today, beans down 7 to 10, Chicago wheat down 10 to 17, Minneapolis down 4 to 5, and Kansas City down 8 to 10. On the week, the corn market down around 6 cents, beans around 8 to 9, Chicago wheat down around 3 to 4, Minneapolis wheat down in that 5 to near 6 cent range, Kansas City down 10 to 11 cents on the week. So kind of a negative bias for the day and the week. Kind of culminates on a sour note here to some degree after these markets tried to get up and build a little bit. Again, we're still holding some important support levels, but it could have been a far better week than where we finished. So we're going to come back here next week, see what we've got. I think the big problem right now is farmers selling here as we approach the May contract is having to pick up here to some degree against contracts that were delivered before load restrictions. That's keeping some pressure on. Also, when you look to the weather trends, we've got this corn crop going in at a rapid pace as well as spring wheat. So we're starting to see areas that can go going very quickly. Obviously, North Dakota still plenty of problems, but that seems to be the one remote area that is dealing with some issues, and that will keep areas that can't go slow on the spring wheat, but otherwise just kind of stuck in a bit of a rut here, and that keeps pressure on the markets. We'll maybe need to watch this Ukraine, Brazil area as well as the U.S. now as quickly as we're drying up, but just going to have to see where things develop into. Haven't taken out any downside, lack of upside price counts, so path of least resistance remains lower here yet. Feeder cattle market up 37.5 on the day. Live cattle down anywhere from 97.5 to up 92.5. Hog market up 155 to down 10. So really mixed markets depending on which months you're looking at. On the week, feeders up 27.5, lives down 967.5 off that April for the weekly, and the hog market up 1460. So 93 to 105 is kind of the live basis if you can get to a location that is accepting cattle right now. Box beef up $45 on the week to show how much demand we still have at the retail shelf, how limited supply we have as a result of packers having to shut down plants, and how big the backlog is with the futures market struggling here as a result as well. So just a mix of emotions across all sectors here, and unfortunately the cattle producer is a loser at the end, getting backed up and really having problems finding markets for these cattle. Exports were dismal, and that did not help matters this week. On the hog side of things, cash is zoning in on this $48 level. Exports were good this week, but when you've got slaughter plants shut down, again, $48 cash is great if you can find a place that's slaughtering hogs. If you can't, you're just, lack of better terms, out of luck here, and it's just a bad circumstance within the market. So we'll see how things kind of come together next week. Again, obviously, what happens here with the direction into May, whether we open things up, open on a limited capacity, is really going to set the tone. This has been Jim Emter of Ahn and Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Have a great afternoon and great weekend.